Spanish worldwide seminar today, so you guys know that it takes me a little bit to get ready. Okay, guys, again, welcome everyone to today's forum. Today is 11th of December of 2012. As everybody knows, our view on the market, we believe that the US dollar is in what we call, is in the zone. In other words, in the crushing zone or inflation zone, when the two trends are having the fight. Right there, believe it or not, guys, you don't see it. The 1 hour trend and the 4 hour trend, they are having a fight right there in that area that we are. Yesterday, it looks like now the bearish dollar, they're making the push, and they stop the bulls of the dollar at the 50% back of the rally from these days. In other words, this is the inflation area right here in the dollar, right here. If the bulls of the dollar doesn't break that area, the dollar goes to 77. As simple as that. The dollar is a sell, and I keep repeating that. I mean, the dollar is a sell in the 1 hour. Don't get fooled about that. Until that inflation area right there is not broken, the dollar can go all the way to the downside. There is no difference. Technically, there is no difference between this level and between this move and this move. There is no difference. Both moves are 3 ways against the 1 hour trend. Both moves has not been able to break down the 1 hour trend in the dollar. So in our view, the dollar is not a good trade. In our view, until that inflation level make a solution, like I say, if the system that we follow, the dollar was a sell right here at some degrees. All right, so let's see when it gets to the other inflation area that it is right now, if the bulls have what it takes to do an extension of the trend. And that's what I'm explaining to you guys there, guys. That's the market. That's the market right here. From here, the bulls better make a move. If the bulls do not make a move from here, the dollar can run in lower. There is no guarantee of the extension due to the fact that the recovery is not a 5-way, it's a 3-way move. Everybody understand that? Everybody knows how it goes. Everybody understand that? It's a fight. If you take a look at the trend report in the dollar, look, red and green, ring and red. That means that there is no trend. Trend is right here. New Zealand, Aussie. All those are trend. You see how right here they are all in the same color. That's trend. That's trend right there. And technically, guys, that's all we're asking you guys is to be smart and wait a little bit. It won't be within that inflation area all his life. The dollar, sooner or later, is going to break one side. A previous inflation area in the dollar was right here. Look. That's an inflation area. If the 50% back of the previous move lower, you see, that area, they're always going to get a response from the trend around what we call inflation areas. And right there now is happening. Let's see who wins. And then, because that no every day in life, you got the chance to take sides always with who you win. We win the fight, and you don't need to be a fighter. Learn that. That's trading. Right here, you stay on the sides, and whoever you win, you take sides with the guy. You don't need to be a hero and be in the middle of the fight because you can get a punch like that. That's as simple as it gets. All right? So that's the dollar. Now, going a little lower right here, the same. You got a 1 hour downtrend right here, which is still bearish. You got a 15-minute outtrend, which is still bullish. This is your inflation area. This area right here. This is right here. Until doesn't break the trend, the dollar is a sell. You like it or no, it's against your opinion. Until doesn't break the trend, the market is a sell. You know why? Because in the higher degree trend, which is the 4 hour, the dollar, the daily, the dollar is a sell. Right? So if I can draw you guys here 3 areas, and you guys are going to understand now that I explained to you guys what is an inflation area, you guys should understand where we are. The dollar makes a move. The dollar went to the 50 baht. Perfect. But this move break the bulls. This move right here break the bulls in the daily chart. It break down. It need an extension lower. Now, it reached here. Now, right here, look. This is the 76.4, the 618 of this trend. This is an inflation area to the downside. This is an inflation area to the outside, and this is a third one. So there you go, your dollar, guys. There goes your dollar. That's where the dollar is. A fight right there. Onto one of the sides win, you cannot take long. You cannot take either side of the dollar. Either side. And the last winner of the dollar is the daily. So you got to understand that the trend is in favor of against the dollar. That's your last winner, because the 4 hour bull trend in the dollar fell. And then with that in mind, the dollar is the dollar in the daily needs to go for the inflation area that is between 77, 75. Now is in the lesser degree, but you know that sooner or later, the higher trend is going to prevail. And that's where we are right now with the dollar, right here. That's where we are with the dollar. And the dollar is going to find a solution either to this side or to this side. I want to mention also that the S wave can be here. If anybody takes a long dollar position around this area, please be aware of the trend update. If we change the 50-minute trend, if we change the 50-minute trend in the dollar update, guys, and we put a bearish, get out of there. The same with the pound sweeps. When we change the 50-minute to the downside, you better take that short with the target at 135. All right? That's being smart. That's trading with confirmation. Now, something that happened over the last 24 hours that is very relevant in the market, very important, is Cooper. Cooper, as you guys see right there, Rafi, it did 5 ways in the 4 hour trend. 5 ways did Cooper right there in the 4 hour trend. What those 5 ways means, I can tell you this, guys. Those 5 ways means that the risk trade is very supported. And it means that's the first thing that it needs to come to your mind, that the risk trade is very strong. Those are 5 ways in favor of the daily trend in Cooper. That's the first thing that means. Second thing that means is that the risk trade is about to make a correction. And third thing that means is that the market looks like it's going to respect this low in Cooper. All right? So this means extension higher in Cooper. Everybody see that, right? Clear-cut 5-way move in Cooper. Clear-cut 5-way, no doubt about it. 5 ways. One, look the other side. You're going to see here a divergency and another divergency. And the number of swing, 1, 2, 3, 4, 5, which is 1, 2, another 5, 4, and 5. Very nice right there. 5 ways in Cooper. Very nice. And this is the 4-hour trend. If I take the chart and I put the daily trend, you guys even going to see a divergency in the daily trend right there. Let's wait for the other side. Look. So this is a powerful move right there. All right? Now, if you take a look at the chart of Cooper in the daily, you guys are going to see this. That Cooper, like we've been repeating, and I want to ask my good friend Rafi, this has been, he's the old timing here. How many times, Rafi, I have said that until Cooper didn't reach 414, 420, the risk trade is going to be supported. I have said that, I don't know, maybe 100 times. And these 5 ways here is telling me that this is a significant low on November 16. And then Cooper is supported. And consequently, everything that is related with risk, oil, S&P, dollar BCL, everything is supported. And this is supporting the idea that we have that the market is bullish risk, because wherever it goes the Cooper, it goes the market. So that is going to be some sort of risk off in the market, absolutely. And that's going to be my next job, is presenting you guys why do I think that. But remember, the risk off in the case of Cooper is going to be limited to the 16th of November. And when you see 3 ways back in Cooper, you guys are going to know that it's time to start buying risk. All right? Now, I want to show you guys this. I'm going to show you guys, one second. I'm going to show you guys this chart. This chart right here. In this chart right here, we got a series of pairs or instruments that they are very, very unique and correlated with risk. Those elements or instruments are, there is 4 right there. There is the S&P, there is Aussie dollar, there is the US dollar index, and there is Cooper. All 4 of those elements are right there. All those 4 elements, they're following, believe it or not, the same path. And they're following, believe it or not, a path that is going to take them all the way to the top of the tree before every one of them fall. Because sooner or later, they're going to fall. And I want you guys, and I recommend you guys now on Cooper is the best market always is. And I tell you for experience and for being always use market correlation as a clue. When Cooper is the one showing the path, the market absolutely become easy. I want you guys to learn that. When Cooper is the one showing the path, always the market become easy. Why? Because that's the reason why Cooper is called Dr. Cooper is because a reason. It's not because we want to. It's because the whole world depends on Cooper. Now, I'm going to show you Cooper first. You guys saw already. This is Cooper. Cooper, June 4, September 14. This is November 16. All right. All right. And Cooper is finishing, like you guys know already, 5 ways here. So this was a 3-way, then Cooper needs to do this and continue higher to the 414 area right here. Absolutely, Karen. Absolutely. I'm with you there. The same with gold and the same with silver. Now, what's going to happen here is that this is the path of the market. This is the path of the market. A risk-off coming in that should fail and then higher. This is money knowing that. Now, let's see the S&P with Cooper. Same shot. Same shot. Same day, same day, same day. Absolutely, it is telling you what the S&P, you don't need to be a rocket science right there to know what the S&P should do. And let you guys know right there. You guys are good enough right now to understand what should come after what should come from for the Cooper trade. Right? Another one. The US dollar. Let's take the S&P, the US dollar. Interesting. Same day, about same day here. You see? Higher, 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 higher dollar. Lower, lower, lower Cooper. And then higher Cooper, lower dollar. Look. Lower dollar, higher Cooper. Very well correlated. That's telling me that whatever strength we see in the dollar is going to fail. That also is telling me that the dollar should stand in a strength, either to 81 or to 82. The higher, the better. Because after any strength, we should see weakness. All right? Now, let's see another one, another big player of the market. Then we go to Aussie. This is confirming to me that Aussie that we have, of course, I hope that it's understandable that we have the right count in Aussie. Now, Aussie is ending this cycle. We know that. Aussie is going to drop. At least it's going to go to 103 again. But then Aussie should bounce back. If you look at Elliott Wave forecast, the 4-hour chart in Aussie, that's the path they're proposing. Look, W, S and another rally before a big decline. You see how easy it is scattering? When you know it, that's what I say, that sometimes market gets easy. And then, having known that, like I say, I want all you guys to take away that idea that the market is going to crash. And I tell you the truth, we say about 6 months ago that the minimum level or the time-wise that the market can find a temporary top in risk is January 13 of 2013. That's the 50 back in time. It can extend until March 20, I believe, of 2013. From there, the risk trade should take a big, big drop. That should can take the S&P for 1,400 or 1,500 that stay at that level. It can take it all the way back to 1,100. But like I said, guys, I want you guys to remind it. Cooper, follow Cooper. Follow Cooper left and right. And you guys are going to know for the next, I would say, probably 2 months when the market goes. I think it's very clear. And I think it's undeniable right there what the market intentions are. So let's hope that means the dollar gets strong. Let's hope that means the dollar goes to 82, that the euro gets to 126. Let's hope for that, because that's going to present a much better entry that's going to present a much better entry. Aussie yen is the same, Rafi. Aussie yen is the same. That's going to create a much better entry for us to buy risk one more time. All right? So that's all I have to say, guys. I cannot say nothing more. This is very clear. Aussie yen, this is what I think, Rafi. It's about to create a temporary top and drop. That's what I think. I think it's going to drop. Silver can get into a double correction. Aussie dollar have a much better structure than Aussie yen. An Aussie dollar at least needs to make 105.45. Now, silver reached the minimum target already at the 50 back rubber. That was the entry there. Now that we're looking for double correction is because Gore hasn't reached the 50 back. Let's see if what happened. Don't buy it. It's a sell. Don't buy it. I don't know if the euro dollar is going to decline, Hassan. If you're sure, leave it there. Or Robert. The euro dollar based in Cooper should decline. I don't know from where. I mean, it can go to 130.31. It can go to 130.60. I don't know. Instead of being short euro dollar, it's better than being short euro yen. I see 5 ways in cable from the lows, Rafi, yes. That's why we're calling a 6 and 7 swing. Like this. I know that cable follow Cooper and go. That's why I believe that at any moment, cable can be doing a flat from here. 3, 3, and a 5. Who knows? It's a matter of the trend, guys. Any other question, guys? You short a euro pound from which level? Because I like it a little bit higher. $80.75. I like a short from 80, 89, 81 area, from that area. Any other question, guys? I think that the market is, like I say, as clear as a water, and no reason at all. No reason. Don't sell. And I'm going to explain this to you guys 1 second here. This is the trick, guys, of the trend report. Take it or leave it, like I explained on the room. Until you don't see two trends touch each other, in other words, for example, why do you think the house is so good? Because there is two greens together. When you see a step trend, in other words, green, red, green, that's not a good trade. I think it should take profit in the S&P, Byron, yes. As far, you need to see two of them together, like right here, like right here, like right here. When you see one red and the one on the side, either side is green, don't take that trade. For example, the euro is not a good short because the euro, the 1 hour trend can rule out and it can run to the outside and never look back. That's the trick of the trend report. Two together. Look, what you think? Look at the UK, the index. Look at the DAX. Look, other spell. You see? That's the way it is. The S&P is on the cycle from here. Look, this is Aussie. This is the S&P. At some moment, this cycle is going to end. I can see 1, 2, 3, 4, 5, 6, 7. Now, that cycle, it can extend, absolutely. The trend is to the outside. It can extend onto 1451. Who say it cannot? Now your pivot level is this one. You got to be bullish against this level. Like we were bullish last week against this level. This market is very simple, guys, if you know how to do it. Now, Aussie yen, let me see, this is 60 minutes. Aussie yen, like Aussie yen is ending a cycle. You see, from October the 8th. I'm expecting that both at one moment gonna correct that cycle. And that's going to make that the S&P also is going to correct that cycle. It's very simple, guys. Very simple. No need to be in the wrong side of the market. No at all. If you want to be and you don't want to learn, it's up to you. But I think that what we're showing here to you guys, if you don't make money in this, you are in the wrong profession. Any question, guys? I got 1 minute. That's the trend, Kelly. You know why? Short and silver, they are good cores, like you say. It's very simple. Look, silver. Don't you see two rays together? When you see two together, that's it. That's your trade there. Look at gold, two together. That's when you make money. If you see like cable, a red, a blue, a green, and a red, that's untradeable. Don't trade that. If you see the euro, a red, a blue, a green, and then don't trade that. That's untradeable. This is very simple, guys. Honestly, very, very simple. Okay, guys, so I gotta go. I got the Spanish one. I hope you guys understand now to start following the Cooper chart. That's gonna take us to the promised land. All right. Okay, guys. Thank you. See you guys later on. Any question? Louis in the room right there for answer question to you guys.